Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, January 13th, 2010. Well, folks, as we get started today, you can see the market is trading slightly to the upside. You have the Dow trading up on the day about 38 points, the Nasdaq up 18, and the S&P 500 up about 6. Not surprising to see a little bit of a bounce back today. We talked about this last night to our premium subscribers, talking about a possibility of a pause day after such a drop yesterday that we saw, and again, quite a drop on the back of those Alcoa earnings. Let's take a look at Alcoa and see how that's reacting today. Intraday, Alcoa getting a slight bounce back right around the 35-cent to the plus side range, trading at $15.87. Interesting again to note, Alcoa absolutely got demolished yesterday, folks. Now, the key was to note on Alcoa, and this was the secret that I released to the premium subscribers in the hot charts and alerts, to look at the monthly chart, looking at your Alcoa monthly chart, and this is really what told us that there was a high percentage. We gave it a 70% chance of a fall, a pretty decent fall there on earnings, and this was what we saw, folks. If you look at the low pivot here, see this low pivot right here? 2002 low pivot, that's exactly what Alcoa hit the day before earnings. All right, the day before earnings, actually the day of earnings, in fact, as earnings came out after the bell, it hit that range, and sure enough, just like the charts dictated, that was a major resistance point, and you can see the fall that ensued following. Now, today you're obviously getting an intraday bounce, just a small bounce, 35 cents, after about a $2 drop yesterday. That's a minor bounce. Now, going back to the SPY, initially, we gapped up this morning. You gapped up this morning really on the back of a little bit on the weaker dollar side, so that pushed commodities around the even mark for a little bit. You saw a little bit of a bounce back as people jumped in. Remember, every pullback you get in the beginning, again, before we really start to come down hard, you get these bounce back effects. That's because people, traders, individual investors, amateurs, pros, whatever it may be, they're utilizing every pullback as a buying opportunity, and that's exactly what's going on today. So again, you had a nice pullback. People that missed the market over the last week of putting new money in because it ran up so quickly are now saying, okay, well, it pulled back 1% yesterday, 1.5%. Let's jump right back in. So they're doing that. The market's floating up. The volume has really started to die down as well. Today we have done over 100 million, but it doesn't look like we'll do quite as much volume as yesterday. Yesterday we did about 160, 170 million. Right now we're at 108 million. It's still the second best trading volume of the year, but again, as I said last week, it's going to take you about a full week to pick up in volume until you get back to normal levels of 150 million-ish, give or take. All right, now the key about today, folks, there was a key call I had made, and I had written an article, actually, was posted on Google Finance and a bunch of other areas, a bunch of key websites. The call went out last Thursday that oil was extremely bearish, and I said I'm giving it a downside bias with an extreme bearish note here, and the level was at $41 on the USO. And my premium subscribers in the chat room in the research center, they loaded the boat on SCO, which is 2 times short oil there, or shorted the USO. Again, today what happens, I gave it a target. There were 2 targets. One was right here at 39.50 or 39.40. The second target was the ultimate target, and that was down to about 38.80. Sure enough, oil came all the way down on the back of inventories. This is the daily chart, but I just want to go to the intraday. You can see all the way down here. This completes the full cycle from the bearish call at 41 to 38.80. Our final target hit. That's where I alerted in the hot charts and alerts to take off the money on the SCO. And sure enough, that was a huge call to take it off, because look, oil has rebounded all the way back up. And why did I make that call? Why did I know down here was going to be a key level? I'm going to show you right now. If you go back to your daily chart, please turn your attention to the 50 moving average and the 20. See them right there? Right here to right here? That told me that was your final target. In addition, it's gap window. See how you have a big gap fill down here? This is gap window. Those 2 moving averages, 1, 2 supports plus the gap window, that's 3 key support lines showing us that you're going to see support. You're going to see a bounce on oil off that level. Therefore, remove your shorts on the bearish call on oil, as we told everyone to do and as everyone did, and take your profits and run. And sure enough, the bounce back in oil shows you that was the exact call. So a perfect call all the way around from the short call here up at resistance, again, giving it an extreme downside bias, all the way to a neutral stance. Now, once we hit that 20 moving average, I said, guys, I'm going back into a neutral stance with a possibility of a bounce, and you got the bounce. So a nice one there. And again, folks, this is all available in the research center for you guys. Anyone can see it. Very easy to trade it. We don't make anything complicated. We teach it as we go. So it's educational and guidance all wrapped in one. Now let's go back to the SPY and see what's going on here. What the key about today's action is, first of all, you can see we had the gap up and then the rollover. The rollover came again as the dollar rebounded, the dollar moved up, that started to push down oil. Then you had oil inventories come out that pushed down oil even more. Then once oil bottomed out, you actually started to retrace and move back up on the markets. And you can see certain stocks like let's take a look at Goldman today. Goldman up 53 cents. All right, so there you have a little bit of a positive day on Goldman. Apple Computer up $2. Interesting to note, Apple Computer right here at the 200 moving average. However, note that it's making an in-spirit of bullish pattern. So a small bullish pattern starting here, which could tell us there's a little more upside this afternoon on Apple Computer as long as this 200 holds in this pattern. If you start to fail the breakout, you could come in. Now, a failed pattern breakout will ultimately result in a downside move, pretty substantial downside move as well. But right now you're following an in-spirit of bull flag pattern right here. As long as it maintains that pattern, you would probably have a target in my book of this pivot high from the 11th, it looks like, which is at 210.50. 210.50, another dollar higher or so on Apple from this level. If you get to that point, I think the Apple could probably be shorted for a pullback back to the 200 on that move. If the pattern here fails, then this is where you're going, right down to 208.80. 208.80 and then possibly even down to 208.40. Right in that range. All right, that's Apple's chart. Now, again, I want to go back to the spiders, talk a little bit more about the intraday since this mirrors the S&P. The move came all the way down. Notice how, see this pullback yesterday right in here? This is where you fell down to. You had a nice dip, but look at the tails starting to form. One tail, two tails, and look at the reversal. Same thing applies, and this is one of the big teaching lessons that I did to the chat room today that I gave them, and I'm going to go over it in the Research Center tonight really in depth. But when you see 1, 2, 3 tails in a row, that tells you there's going to be a down move with probably about a 75% accuracy rate. And again, everything's all about probabilities, folks. I mean, when you're a trader, in your mind, when you're analyzing a trade, it's all right, well, what is my percentage win here? What's my percentage lose? I don't take a trade unless it's 75, 80% success rate. All right, generally my trades are 80 to 90% success rate, and we average probably about an 80 to 90% success rate on all the trades we call out. But bottom line is, this signal, one tail, two tails, three tails, is a bearish signal. Why? Because what's going on here is buyers are trying to push the market up. That's what creates the move up to these high levels of the highs on the tails. And then sellers are coming in and pushing it all the way back down. When they push it back down, that creates the tail. That's why you have a tail there. All right, what happens is when you have sellers winning the battle, essentially, each battle here, pushing it down, creating the tail, pushing it down, creating the tail, pushing it down, creating the tail, it essentially creates a situation where 3 battles have been won by the bears. The bulls were not able to close that candle up or those candles up. Therefore, the bears win the battle or the war. The ultimate war is won, and the market will fall. The buyers who are fighting to push it up, they step away, and the markets fall back down. Then you start to get tails on the bottom, and you can see the reversal coming right back in. Same methodology is utilized there. So these are, again, just key points. The in-the-money stocks methodology that continues to show us the moves in the market will take and be so accurate as such, all right? Now, going on to, let's go check out some key charts here. How about the Amazon chart today? Amazon getting a nice rebound. What I want you to look at here on the Amazon chart is we're going to take a look at the daily. Amazon Daily. One thing I pointed out to the chat room today, folks, and we actually called a long trade on Amazon today, was at this low pivot. Now, why did I utilize this low pivot? See this pivot right here? See this high pivot right over here? So here and here. Look at what we came to today. At that point, which was a break of 126, it went to 125.75. I gave the alert that you should probably look for a bounce on Amazon, and look at the bounce. From that level, you are up now $3 on Amazon. And again, it doesn't take a brain surgeon. I'm a big believer it just doesn't take a brain surgeon. It just takes a little hard work, and I know a lot of people are afraid of the hard work, but it doesn't even take that much hard work. It takes some dedication. That's about it. Anyone can do it. I've seen, 10-year-olds that can grasp this type of stuff. So, I mean, it does not, again, take a genius to know how to do this. Now, last but not least, folks, I want to give you the heads up that the hidden gem, the bonus hidden gem, will be out next Tuesday. You want to get on board, folks. This hidden gem is going to be big, in my opinion. The HYTM, last hidden gem that came out on the first day of January, ran 45% in 2 days, and I still like it to go even higher. All right. Ultimately, I gave a 50% target, but ran 45% in 2 days alone, and it's still hovering well above where we mentioned it, up probably about 30% here on that move. So unbelievable move here on the hidden gem from January. And there's a bonus hidden gem coming out. You want to be ready. In addition, the hot charts and alerts and the Pro Trader watch list have been on fire in January, folks. The money, again, being taken is just insane. We've gotten emails that have come in as testimonials. They've been unbelievably kind, and we continue to look to give the best trades possible successful in the coming month, coming year. It will be a huge 2010, already turning out to be a huge 2010. Join the Research Center, join the chat room. We'll see you soon. Take care.